Okay, so we're here yesterday. We're expecting much more robust action. Market should have taken out higher, but yields depreciated yesterday. This was used as a pretext by this issue to complete consolidation of a wave 1-2. That's what we're now seeing here. Okay, really, this is a 1 hour chart. Remember, we had a trigger yesterday, and this was, we were expecting to go very quickly to 116 and at least 115. Well, we hopefully were having an entry at 114.6 with a stop at 113.8. I hope we didn't get hit. If you were there at 113.8, we just missed it by a few pips. Even if we got hit at 114 or 114.10, the trade probably is still good. Only we'll use lower levels now because of what we're seeing. So I want to close out. If we were at 114.60, 114.40, you want to close at least partial size out, half size. This market is currently doing an A, B, and a C. This is what we're seeing right now. There's a 1, this is the valid wave. There's a 1, 2, there's a 3, there's been a 4A, 4B, and 4C, and this is a wave 5. There's very mild probability, almost zero, but mild. That wave 5 is not yet finished, but I don't think we should place any money on it. There's a mild probability that 5 actually, because we had a very strong signal yesterday, so there's a 1, 2, there's a 3, there's a 4, this 5 is still going up. And I don't want to put any money on it seriously, except that if you're already long, you just make the best of the situation. So we just have to do another 5-minute recess, sorry, and then we'll be right back again with this United States dollar against the yen. Okay, so there are two possibilities really, but my gut feeling tells me that we're gonna be seeing the bullish possibility. Bullish possibility is what we've been seeing on yields. Yesterday was just a spike. This is the count that we're looking at. This is dollar yen now. I don't know if we're in the market or not, but if we are in the market at least half size, it would be good. We would hold it because there's 1, 2 here, there's a 3, there's a 4. So that 4 was a runaway flat. Okay, so all of this is actually 4A and 4B and 4C. USDJPY 4 comes in here. Very horrible pattern, but this is life. We're sorry. Okay, so there's a 4A here, there's a 4B and a 4C, and the market is still going to be doing a 5 inside of this LA channel. The fundamentals support this move, and we are still supporting at a neckline. Okay, so, and it is also possible that actually what we've been seeing, level 4 drops back here. That was a 3, a 4A, a 4B, and a 4C. This is a 5, and it bounced at that dashed white line. Just did the 1, 2, 3, 4, and a 5. We're still in 5. So if you are still long, if you have not been stopped out, you would consider to actually hold your longs all the way to 115.56, 115.8. The stop this time around is going to be much lower. We're looking at 112.4 at that red arrow. Why are we going so low for that stop? Because of the second alternative. Okay, so the second alternative would, just bear with us a second. So in this first alternative, we're still doing a wave 5. We're going to be having a 1, 2, and then bingo, we will of course into 3 and a 5, and we all know now this story. That's what we really expect. We're now inside of this Elliott channel. All right. The second alternative you would consider is that no, this is not going to be true because momentum is not very strong on the 1 hour. It's very strong on the 4 hours. That's why we think this is a bullish entry, and that's why we believe wave 5 is coming in soon. You're having a 0 line rejection here on the 4 hours. And on the day, of course, everything is strong, and on the week, and everything goes up as of there. On the 1 hour, however, we could take a confirmation to get into that trade if we're not already long. It is possible. So let's also check the 15. So what we're seeing on the 15 minutes is that it is possible we have an extended correction. This is of course all yield related, all related to yields. All right, so if we are not correct and we have that extended correction, what you've really been seeing is now the market has stopped out in 5. There's a 1 2, there's a 3 4, there's a 5. This 5 runs up here. Okay, I don't have to take it down, but let's just say that's it. There's gonna be a high degree correction ABC. You're looking at 113.4 again. All right, and overall what you are really seeing is another head we're doing shoulders. Fundamentally, I believe we're not supporting this view because we were out of this on a ending diagonal. So on a wedge, we had a wedge here. I just took off the upper boundary, because if this is going to happen, then we are on this kind of wedge broadening the top, and it's going to break higher, yes, but we can still do a correction to 113.9, 113.65. This is this kind of pattern, what it shows. It shows some kind of a failure at the pattern top and the neckline. So what we would consider to do now as traders, we're not really going into all of this analytics. If you're not yet long, you would consider to buy at 113.9 or even 114.10, these levels here, half size, at the remainder of your size at 113.4. That is if you're not already long. If you're already long, okay, you hold on all the way to 115.8, 115.56. You only have to drop your stop, bring down your stop all the way down to 112.4. If the risk becomes magnified, you're no longer risking 3%, you're risking 6%. You would want to close out half of your size at that neckline, okay, as close to that neckline as possible, and then carry the rest of their position all the way to 116 and 115.8, that level here. If we break above the neckline, we can add again that other half that we have already got rid of. My personal bias is that we're moving higher to wave 5 without seeing these low levels of 113.6 and 113.4, but we have to be prepared for all possibilities. So being biased, yes, we're all biased, of course, in order to be able to make a trade, but it's not always a good thing. You have to have a wider perspective and appreciation that not what you are biased on is going to be the same market's point of view or the same market's bias.